Good morning, everybody. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Services Division and the Taxpayer Education section. And on behalf of our Commissioner, David Giacchino, and the folks at Taxpayer Services in the Department of Revenue, we want to welcome you to today's presentation. We're going to be talking about short-term rentals today, the different taxes that are involved with these particular types of businesses, and some tools and resources that are available for you as well. So joining me also online here, you see Miss Katie Julian, as always, and we're glad to have Katie. And we have Mr. Thomas Meisenzahl from our audit division. He'll be auditing all of you. No, just kidding. It's a joke. He can't audit all of you, let's be honest. But no, Thomas is here as a subject matter expert. He has great detailed information that's going to be able to help us give you this information so you can avoid the audit. Now, how about that? That's even better. Also, our Assistant Director of Taxpayer Services, Dan Vinson, is online and he is monitoring any types of questions or issues that we might be having today. So with that, I will go ahead and turn this over to Katie, who's going to tell you about some of the housekeeping things and then begin the presentation. So thanks, everybody. Katie, go right ahead. Thank you.
Thank you, Billy, and a special thanks to Thomas for being our special guest again today. He's been with us before and is one of our favorite subject matter experts on our monthly tax webinars. So welcome to Thomas, and thanks to you all for joining us. In the chat, I put a link over to the PDF of today's presentation. It'll have live hyperlinks in it. You can't click on the hyperlinks on your WebEx screen, but you can. The PDF will take you over to the links that you'll see in this presentation. We will be putting a video of today's presentation up on our website in our webinar video archive later today or tomorrow, whenever it's made available to us, in case you want to go back and refer to a video. And you'll see at the bottom of the screen you see right now, there are a couple of contact pieces for you are to email us revenue.support@tn.gov or to call us 615-253-0600. We'll put that up on a slide again towards the end, but that's a way to reach out to us if we don't get around to your question or if you have additional questions after today's presentation. We will keep the chat closed while we're doing the presentation part, but then if there's time at the end, we'll open up chat for any questions that you may have that don't get addressed if we're able to get to those. So go ahead and move right along here. Again, this month's free monthly tax webinar is on the taxation of short-term vacation rentals. We are going to be going over key terms, the applicable tax types. We're going to focus in on business tax, sales tax, and occupancy tax. We'll share with you some resources and then go over some frequently asked questions and hopefully have some time for some chat questions. This has been a huge deal in the past few years. There's been immense growth in the vacation rental market. If you don't know that, where have you been, right? It's everywhere. I was at our Sevier County clerk's office a couple of months ago visiting them, and I'm not kidding you, every single customer that came in to get a business license was in the business of short-term rentals. So of course that's Gatlinburg, Pigeon Forge, so makes sense there, right? But it's all over the place. The growth has led to homeowners and businesses renting their homes, condominiums, cabins, tree houses, yurts, you name it, for overnight accommodations. And that's pretty exciting for a lot of businesses and a lot of individuals to be able to make some additional income in this way. Let's see here. One thing I want to bring to your attention, and I'll take you if we've got time later on a little tour to show you where our other tax manuals are, but we're real excited about this new manual that we've got that was been out for a few months now. It's an industry-specific tax manual just about the taxation of short-term rental units. So if you've got the PDF open, you can click on that link there on the left. It'll take you right over to this tax manual. A lot of information that we're going to be presenting to you today comes from that tax manual, and the manual will expound on the information and give more details to you. Also would refer you to all of our other tax manuals for tax type specific information. So business tax, sales tax, so on and so forth. But we're excited about having this new industry specific tax manual. Our audit division, Thomas's division, they're the ones that put these out. And As staff, we use these every single day. We refer to our tax manuals every single day because it's basically the law, the rules, everything rolled into one and in really in easy terms that everyone can understand. So, all right. So the first thing we're going to go over here with regard to short-term rentals is some terminology in tax law, because there are terms that are used differently in the different tax types that mean basically the same thing. So rental units, overnight lodging, short-term rentals, they're referred to in various ways all throughout tax law. There's a common description for these terms referred to in our guidance. So marketplace facilitator, short-term rental marketplace, those are terms that mean a person that operates a platform through which properties are rented. An example of a marketplace facilitator or short-term rental unit marketplace is going to be Airbnb, VRBO, platforms like that. The person who owns the actual property that's listed on these platforms is called, in sales tax terms, a marketplace seller. For local occupancy tax terms, we call that a short-term rental unit provider. For business tax terms, we would call that person an individual property owner. The property being rented, it can be referred to as lodging, accommodations, short-term rental unit, vacation lodging, means all basically the same thing, and that's your condo, your treehouse, your yurt, whatever it is, that is lodging, accommodation, unit, so have you. Now, this is where it gets a little bit confusing, and I'm glad to have this chart now because I can't keep it straight in my mind all the time. It's the number of days of the length of stay that determines whether the tax type is applicable. So it's the number of continuous days of occupancy. For sales tax, that's 90 days. For local occupancy tax, it's 30 days. And for business tax, the short-term rental term is 180 days. And we'll break that down a little bit more when we talk about each specific tax type here in the next few minutes. One thing that is not listed on here is a term that we call a vacation lodging service or a property management company. That's not listed on this chart, but we will go into detail about what that is because it's kind of looked at differently when it comes to occupancy tax and sales tax and business tax. So, all right, we're going to start out talking about business tax with short-term rentals. So overnight rental of real property for less than 100 days is subject to business tax. Over 180 days, that's considered a long-term rental. So if you are renting a house out for someone to live in over 6 months, no business tax is going to be owed on those receipts. Properties can include hotels, motels, campgrounds, homes, rooms within a home, bed and breakfast. Lots of different terms there can apply to overnight rental. Now, we were talking about this topic this morning before we got going, talking with Thomas and Billy and Dan about campgrounds. There has been some confusion about campgrounds in the past, right, Thomas?
Yes, ma'am. And the big thing from an audit standpoint that everyone needs to understand, I think we have a couple county clerks in here today as well, but campgrounds that offer like electric and water or even sewer hookups, like, your traditional campground that you pull your camper to, hook up, spend the week or so at, those are also, business taxable as short-term rentals. Now, if you are what we call a harvest host, or somebody that we call mooch docking or different things like that in the RV world, that's where you basically just rent a piece of land for the night. Boondocking is where you don't provide any service but the land. If you're doing that and that alone, that is not subject to business tax. But if you start providing services, electrical services, water, sewer, all that is part and necessary to the sales price when you get into the nitty gritty of it. So that does become business taxable, and that's a big thing that, from an audit standpoint, we wanted to make clear today, because we run into it a lot. That campgrounds don't think that they're business taxable, and that they truly are.
So those primitive sites that are at a campground, Thomas, so if you are just setting up your tent on the land, you don't have access to anything else, you're not hooking up to their electric or their sewer, Would receipts, if you're a campground that offers both, let's say you've got some primitive sites on your campground and you've got some sites that have electrical hookups and such, would those sites that are primitive, would receipts from those sites be considered in your taxable receipts for business tax purposes?
It would go back to a 51% test of what your
Okay,
business is.
gotcha.
But yeah, if you're just planning on, if you own a campground or you rent out just the land for tent for whatever, and you don't provide any services to it, and then it's non-business
Not
taxable. But
subject.
like I
Okay.
said, if you offer, uh, electric and water hookup right there at the site, or even you offer electric and water hookups, or used to it, that's necessary and pertinent to the sale because that's part of the
Right,
reason why that person is coming to stay with you. And
right.
you know, so
Gotcha.
that's one thing I
Well,
do want to make clear.
I'm glad you made that clear because again, like you said, we do have some county clerks on here and that's where you'll obtain your business license, which is tied into the business tax. And it can be confusing there. I know we get questions from county clerks about that pretty often. So thanks for helping to clear that up. One thing I will say that we're not going to get into right now are all the details about business tax. I was telling you earlier that we have a great tax manual. Some laws changed about the threshold, which what requires you to file business tax. Now that threshold is 100,000 in gross sales a year, which requires you and prompts the necessity for you to pay business tax. But you would still need a business license if you make between 3 and 100,000. So more information on that in our tax manual, but the business tax is going to apply to gross receipts of all the fees that are collected, and that includes non-refundable deposits, cleaning fees, damage protection fee, pet fee, that electrical hookup fee that Thomas was talking about at a campground. All of those fees can be rolled into being considered for your gross receipts for business tax and business license purposes. And again, we're looking at 180 days or less. So if you've got property that's being rented out for more than that, it's not considered business taxable. So this is who's liable for the business tax. The individual property owners that are renting the overnight or vacation lodging must obtain a standard business license and are subject to business tax, as I was just mentioning, if your gross sales are over 100. If your annual gross sales are between 3,000 and 100,000, then you still need to obtain a minimal activity business license from your city and or county clerk, but you'll not be liable for business tax. So property management companies, not the property owner, will owe business tax based on its gross sales from overnight rentals. So if you own a property and use a property management company to take care of that property and book for it, manage the cleaning, all of that, then they're going to be the ones to collect and that are going to be liable, I'm sorry, for business tax. Marketplace facilitators, those are your Airbnb, VRBO, are generally only subject to business tax on commissions and fees that they earn from facilitating the rental. So now this is going to be handled differently for the different tax types. Like I was telling you a minute ago, this is very different than sales tax and occupancy tax, where the marketplace facilitator is collecting and remitting that. For business tax purposes, that marketplace facilitator, your VRBO, they're only going to pay business tax based on the commissions that they earned. You, the property owner, is going to be paying business tax based on the gross sales. But if you use a property management company, they will be liable for the gross sales on their business tax return. Is anybody confused yet? This is why we're doing this today, right? Just to set all this straight, because it can be very confusing, even though we've got a great manual for it now and good resources. This is one of those topics where, especially since it's handled so differently across the different tax types. All right, so we've got a chart here that's going to explain to you about registering for your business license and business tax. Only one license or tax location is needed per jurisdiction for all the short-term rentals located within that jurisdiction. All right, so we've got a little chart here that represents the big circle is a county. Okay, let's say, just for example here, we're looking at Sevier County, since I already was talking about being there. We got a lot of short-term rentals there. Within that county, there might be some unincorporated parts. Okay, I see one little house, one little short-term rental that's located just not within a city limit, or otherwise known as a municipality in the county. We've got 3 short-term rentals located over in city number 1, let's say Gatlinburg, and 2 over in city number 2, let's say that's Pigeon Forge. So this person owns 6 short-term rentals, all within the same county. And we got a question on, one of you submitted a question on your registration form about keeping this straight if you have lots of short-term rentals across multiple counties. So just imagine multiplying this little chart you see right here over several different counties. You may need to get licenses in several different jurisdictions, but you only need 1 per jurisdiction. In the example here, you're going to obtain 1 license from the county because you've got 6 within the county, right? All 6 of your rentals are within that county. You're going to obtain 1 license from city number 1, even though you've got 3 short-term rentals in city number 1, just 1 license is needed over there. And then go over to city number 2, or Pigeon Forge, I think I said, to obtain 1 license over there. You're going to, for each of those licenses that you obtain from each jurisdiction, you're going to just pick an address from one of the short-term rentals to use for registering for that location. Billy, you got something to add to this one?
Yeah, just real quick. Everything you just said is absolutely right. However, one thing to maybe think about is sometimes people wish to get a license for every one of their cabins, every one of their rentals that they have. There's nothing that prevents you from doing it.
Okay.
What the law is basically changed to a few years ago is to allow you who might own lots of different properties within these counties and cities to make the streamline a little bit easier. Okay, because sometimes folks involved with these tend to flip these properties. You might own it for a couple of years and then sell it, and somebody else is the owner. That's fine. That's great. So making sure that you have a valid license when you do have a taxable property in a city or a county is super important to do. Equally as important is the closure of the license and or the tax account if you no longer have a property in any of these cities or counties. Okay. So oftentimes we sort of joke that our Department of Revenue crystal ball is broken and we don't know if you've closed or you sold your property or whatever. But we send out a lot of delinquency notices to people that say, hey, you didn't file your business tax for whatever year. Well, I sold that cabin. Well, okay, you got to let us know. All right. So it's super important to let us know, let the county clerk know, let the city clerk know, let somebody know. And we talk to each other and we can kind of communicate that and get all our records together. But it's important whenever there's changes made that we have those duly noted. Okay. So I just thought I'd throw that out there. Thanks.
Glad you mentioned that, Billy. Here in a few slides, I do have some information and a link over to uh, how to close out a business tax location. So I'll point to that here in a few. I want to point you also, while I'm on this slide, if you've got the PDF open of this presentation, there is a direct link over to a listing of which cities or municipalities impose business tax. So if you do have a short-term rental that's located within a municipality, you can look at that chart and see if that's a place where you're going to need to go get a business license from. And like Billy said, if you do sell a property and the address that we have in our system or the address that you use to register, let's say, for example, you've got city number 1, Gatlinburg, you got 3 short-term rentals over in city number 1, and you used one of those addresses to register for that location, that jurisdiction, and you sell that one, you'll want to contact your city clerk and us, the Tennessee Department of Revenue, to let us know that you've got that one is no longer in there because you're going to need a new address for that jurisdiction in our system. All right, these were the business tax resources that we have available. If you've got the PDF open, these are direct links. Each one of these bullets here, there's a page about business tax information, business tax manual, great manual there. How to close a business tax account. We have a webinar specifically dedicated to filing a business tax return. Just some basic information here. The due date for business tax, it's due on the 15th day of the 4th month following the fiscal year end. If you've got a calendar year fiscal year end, so December 31 fiscal year end, that means on April 15th, business tax is due, and that license, your business license for that location, will be expiring a month later. In this example, would be May 15th. Short-term rentals are classified under Class 3 for business license and business tax purposes. The rate on that is 0.001875. Our business tax rates are real low. Again, they're based on, you multiply that out by your gross receipts. And again, just to bring your attention to this box at the bottom, there is brand new business tax and licensing. There's a new threshold that came about just based on legislation from this year. And next month's webinar is actually dedicated to the business tax and licensing new laws. There's a new threshold of $100,000 for a standard license and the tax filing requirement. That's going to possibly result in some of you that may have a standard license right now, but that don't meet that $100,000 threshold to maybe need to switch to not filing, not required, and switching over to a minimal license. If you think that applies to you, you can reach out to us and we'll kind of walk you through more details about that and how to switch. Just wanting to put that out there right now in case any of you on here right now currently hold a standard license and have a business tax account. But think that you may not meet that threshold this year. Yes, Billy.
Just real quick there, and this is really important for this webinar, that $100,000 is by jurisdiction. So if you have multiple properties, like the Katie had in the other slide, you've got to consider the 100,000 for city 1, city 2, the county, all together. So that's an important point. I just thought I'd bring it up.
That's a really good point because you may reach the $100,000 or go over it for the whole county here, but maybe within an individual city, you think you may not be reaching that, which you would need to switch over and contact us if you think you're not going to meet that threshold in a particular jurisdiction. All right, so just a reminder to filing and paying business tax renews a standard business license. For a minimal activity license, those should be renewed annual directly through the local office, county and or city. All right, we're going to move along here now to sales tax. Switching gears. Sales tax applies to the renting of rooms, lodging, and accommodations for a period less than 90 days. Wouldn't it be cool if the law kind of had it all in line, right? Short-term rental was just considered as less than a certain number of days, no matter the tax type. Well, that's not the case. Business tax, it was 180 days. Sales tax, it's 90 days. The state rate for sales tax is 7%, and then there's a local rate on top of that, and there's a hyperlink here you can follow over in the PDF link over to the local rates. Now, sales tax is going to apply to all of the fees collected for the rental, as well as any other money that a consumer must pay to rent the accommodations. And just like with business tax, that applies to non-refundable deposits, guest booking fees, cleaning fees, any kind of fees that are charged. That rate is charged on all of it. Special note here, cancellation fees are not subject to sales tax. So property owners, marketplace facilitators, and property management companies with over $100 a month in taxable service sales must register with the Department of Revenue and collect and remit sales tax. Both the state and local tax are remitted on the same return. After 90 days, the dealer furnishing the room can refund sales tax already collected from an occupant and claim credit on their sales tax return. So let's say someone starts off as assuming that they're going to be renting the room, the treehouse, whatever it is, less than 90 days, and then they stay over 90 days. At that point, the the owner can refund the renter their sales tax and claim it on their sales tax return. So for sales tax, that does apply to campsites again, homes, condos, you name it. If you rent out your RV, rent out your camper, that's actually tangible personal property, which sales tax applies to all the time. So but for real property that is rented for a period of less than 90 days, sales tax is applicable. So who is liable for sales tax? The property owner. If the property owner rents the property directly, the owner is responsible for collecting and remitting sales tax on those bookings. If a marketplace facilitator, so Airbnb, or a property management company, so when you've hired just to take care of that property for you, they handle everything for it, they are going to be responsible for collecting the sales tax on those rentals and remitting it. Now, sometimes you've got a hybrid situation, right, where the owner of the property uses Airbnb or uses a property management company, and sometimes actually property management companies are the ones using Airbnb for the properties that they manage, just to complicate things further. But sometimes you rent it out yourself. If you're a property owner, you rent it to friends and family directly through you. They don't have to go through Airbnb or through the property management. Your neighbor that wants to rent your cabin can just contact you. So this in that type of situation, kind of a hybrid rental, the property owner is going to be responsible for collecting and remitting sales tax on bookings booked directly through them, whereas the marketplace facilitator or property management company is going to be collecting and then remitting sales tax on bookings booked through them. We did get a question in your registration forms about if you're a property owner who mainly uses management company or marketplace facilitator to do your bookings, but you do a few direct bookings, do you still need to file every month? The answer on that is when you first register for sales tax, you are going to be set up for monthly filing. Even if you don't have any sales, you will still need to go in and file 0 for a month that you have no sales. Let's say all your bookings last month were through Airbnb or through your property management company. You're still going to need to go in there and file 0 as that owner if you have a sales tax account, or else you'll get a delinquency letter from us. If you feel that you need to maybe switch to a quarterly filing or annually filing frequency, then you can contact us about that. But you're going to be automatically set up when you first get a sales tax account to monthly filing. So sales tax registration, this is kind of similar to business tax. One location registration is needed per jurisdiction for all short-term rentals located within the jurisdiction. And a county is considered a jurisdiction as well as a city and municipality. So same scenario here, except for we're going to say that one short-term rental is located in an unincorporated part of a county. One sales tax location is going to be needed for that unincorporated area, and that is going to include only sales for that one property. It's going to be on one location on your sales tax return. Then there's going to be one sales tax location for City 1, and on that one is where you'll include your sales from all 3 of the properties that are located within City number 1. And you'll have a sales tax location for City number 2 as well, where you'll include the sales from just those 2 that are within City number 2. And again, just like with business tax, any address, excuse me, within that jurisdiction can be used to register for the location. All right, so you may be aware that when you open up a sales tax account, you're going to get a resale certificate, which can be used to not pay tax on items that you purchase that are intended for resale. An example of this is going to be you buy a golf cart or some bicycles for your customer to rent for your cabin. You can buy that using your resale certificate if it is going to be used for customers to rent, because renting of tangible personal property is viewed the same way as selling tangible personal property. So anything that you use for your short-term rental that you're using, like cleaning supplies, the furniture you buy to furnish it, you cannot use your resale certificate for those items because you're not selling them. If you purchase, let's say you purchase some t-shirts that you're going to resell to your customers, you can purchase those t-shirts using your resale certificate. But if you're purchasing them to give to them as a gift or like shampoo, let's see, Thomas, you just sent me a little message that we got there's something I'm not saying that might be off. You want to jump in here? Correct me if I'm wrong, please, because I'm often wrong.
So you said when purchasing golf carts or bicycles for customers to rent. So that is technically incorrect. You cannot purchase golf carts, bicycles, etc. on a resale certificate and not pay tax. You must pay tax on it because you are the
Okay.
end user of that item. You then charge sales tax on the rental price of the golf cart or bicycle, whatever. So let's break this down even more. So a campground, for example, buys golf carts to rent out to their customers to drive around the campground. You are not allowed to leave the premise with the golf cart. They have all these restrictions and rules. Okay. You are only using that golf cart at the time that you were there. So think of it like a golf
Okay.
course or a bowling alley. When you go, you rent your shoes. You only rent it for that certain period of time. You can't take that product home with you. So the campground or the bowling alley or whoever buys those items, they are the end user and are required to pay sales tax on the point of purchase. We do have an amusement law in 676102 that talks about the amusement, and that is the same tax rate at the 7% plus your local rate, and you are required to collect sales tax on those purchases of those rentals. And yes, some people call it double taxation, and it does get in there, but it is in the law that whatever you rent, you must charge the sales tax on that because that is tangible personal property and it is subject to sales tax under 676102.
And Thomas, I heard you say equipment that doesn't leave the property as
Correct.
being maybe a key point on that. So this would differ than, let's say, acquiring a rental vehicle at a auto rental place, right? Because to me, those are commonly taken anywhere. You know, not then,
Yes, but
and they're not for
yes,
use on property. And to me, I think that's where you're going with that. Am I saying that right?
yes, that is correct. There's different rules and laws that apply to motor vehicle rentals. But for instances as golf carts and bicycles, things that typically stay on the property that you don't really take possession of or get to take home with you. You're restricted by rules and guidelines. This also applies to, we have several campgrounds in East Tennessee that are on the lakes, as well as Middle Tennessee on Dale Hollow and etc. that rent out boats. This
Right.
also applies to those. So if you buy a boat, you buy a pontoon boat and you're going to rent it out to your customers, you still have to pay the sales tax on that pontoon boat as well as charge sales tax um, when you rent that pontoon boat out for $500 for 2 hours.
So I'm going to fix this on the PDF that we have out there on our website. I'm glad you corrected me in the moment here for live
This was a
and
good
recorded
discussion. Thank
purposes.
you.
It is, and it does get confusing, very confusing when it comes to rentals here. So Thomas, thank you for setting the record straight on that. So I'm going to back up to when you can use that resale certificate. To keep it simple here, if there's anything that you're going to be selling, so back to the example of you're going to be selling uh, a t-shirt or selling bottled waters, those you can use when you go to purchase them. If you're the account owner, you can use your resale certificate for those purchases, but not for things that you're going to be using and or the example Thomas just gave for certain items that are going to be rented out. You'll have to pay sales tax on those. If you're going to purchase a bunch of some stuff you're going to be selling and some stuff you're going to be just using, let's say you're going to Costco and you're going to be buying some stuff that you're going to be selling, a bunch of bottled waters that you're going to sell or whatever. And then you're also buying some cleaning supplies and some things just to stock your, furnish your short-term rental. You will want to separate that out and have two different receipts. One of them you'll be using your resale certificate for, the stuff you're going to be reselling, the stuff you're going to be using. You cannot use your resale certificate for those. And we've got a webinar, there's a link to it over in the PDF, webinar dedicated to resale certificates if you want a little bit more information on using your resale certificate. Okay, so if you own a short-term rental, you may see someone else provide you with an exemption certificate saying, hey, I don't owe sales tax on overnight rentals. Because some entities are exempt from paying sales tax on products or services, and that could include overnight rental accommodations sold to the exempt entity. An example would be nonprofits, schools, government. In order to be exempt from sales tax, that entity must provide proof of their exemption, and the payment form must be in the name of the exempt entity. So if they're providing you, let's say they're a nonprofit, example one here, the renter provides a nonprofit exemption, but they pay you using their personal credit card, the exemption's in the name of such and such nonprofit, but they're using Katie Julian's personal credit card, that doesn't work. So you need to charge sales tax to them. But if the renter provides their nonprofit exemption and pays using a card or a check that's in the name of the exempt entity, you do not have to charge sales tax to them. And very important here, if you want to zoom in on this is, I believe, a nonprofit exemption certificate, what it looks like. You want to make sure that it's in date, the effective date of it is correct, and that it's not beyond the expiration date. But important here to maintain a copy of their proof of exemption, and that's just in case you ever get audited. Very important to maintain proof that they provide to you. Just make a copy of whatever they give to you that is within date. On 247 of our sales tax manual, there's more detailed information about exempt entities, but bottom line, if you're the owner of the short-term rental and they provide you with an exemption, if you have a question about it or wonder if it's legit, you can always reach out to us, the Tennessee Department of Revenue, to make sure of that. But big thing to note there is just make sure that it's not expired and that the payment is in the form, payment form is in the name that the exemption is in the name of. Some links here to some more specific sales tax resources for you. Link over to the sales tax information page, our manual, closing an account. We have a link here to some information about filing a sales tax return, but we also, our monthly tax webinar in a couple of months in October is going to be dedicated to this topic, because we have one out there right now, but it was a couple years ago and there have been some changes. Actually, there's usually changes every year to the sales tax return. So kind of redoing and updating that webinar coming up in October. The due date, I mentioned this already, is the 20th day of the month for tax collected the previous month. Now that's if you're set up as a monthly filer, which you are typically set up as when you first register for your sales tax account. It's due on the 20th of the month for tax collected the previous month. But if you're a quarterly filer, it's due on the 20th of the month after the quarter. An annual filer, it's due on the 20th of the month after the end of the annual filing period, but you would need to contact us about getting set up as a quarterly or annual filer. Even if you have not collected sales tax, very important here, I already mentioned this, you still need to file zero by the due date if you have an active and open sales tax account, or else you're going to fall into the trap of having penalty and interest added on. We hate to see you pay that when, especially a penalty. If you've collected no money, there's not going to be any interest, but that penalty will be on there even just for filing late. So make sure you're filing timely. Set a reminder on your phone if you need to. If you've got a sales tax account, must file even if only zero. All right, we're going to jump in now to local occupancy tax. We are not going to be addressing local ordinances and requirements at the local jurisdiction level. You'll need to check with your city or county about any laws regarding local occupancy tax. We're just going to be talking about a particular aspect of local occupancy tax, but these are handled, as the name would suggest, at the local level. You can reach out to them. I found when I was researching, putting this webinar together, lots of information on the local jurisdictions websites. I know for some there's an application process. We did get a question in on your registration forms about the difference between if it's a owner-occupied short-term rental or non-owner occupied or absentee short-term rental, it's known as. As far as our taxes are concerned, there's no difference, but there may be rules locally regarding whether you can or can't. I know that the city that I live within, we're not even allowed to have short-term rentals unless the owner of the property is on premises. So, but again, check for at the local level for rules regarding that kind of thing. But the local occupancy tax is a tax that's imposed by local governments. It's on the privilege of occupancy in any place that provides accommodations for transients for a period of less than 30 days. So a different time limit here on what's considered short-term rental for occupancy tax purposes, anything less than 30 days. This tax has historically been collected by local governments, but a few years ago, beginning in 2021, short-term rental marketplaces, again, those are the platforms that you can make sales of rentals of short-term rentals like Airbnb, VRBO. Those short-term rental marketplaces that offer dwellings for rent for less than 30 continuous days are able to remit that local occupancy tax to the Tennessee Department of Revenue, and that is done via a schedule that's added to their sales tax return. I believe it's Schedule F. Um, Hotels, bed and breakfast, vacation lodging services, and short-term rentals booked directly by the owner or through a property management company should continue remitting the local occupancy tax directly to your local government. I'm going to break that down a little further here with this slide on who is liable. So the property owner rents the property directly. Now, again, we've switched gears over to occupancy tax, even though some of this looks a little bit more like looks similar to sales tax, but the property owner rents directly. They are the ones responsible for the occupancy tax and directly remitting it to the local official. All right, not to us, locally. Property management company rents the property. That company is going to be responsible for collecting and remitting occupancy tax on the bookings directly to the local jurisdiction there as well. Now, I am going to recommend that if you are an owner and you were working with a property management company, I would make that a conversation and just make sure that they are doing that. Now, with marketplace facilitators, so that's your Airbnb, your VRBO, they book the rental. The marketplace facilitator or a property management company, both may be responsible for remitting it to the Department of Revenue. That's where that conversation needs to take place. Ask your property management company, hey, are you remitting the occupancy tax or am I? Marketplace facilitators are required to remit it to the Tennessee Department of Revenue. But sometimes the property management company is too. It's just a matter of a conversation that you need to have there. So an asterisk here that you see, the definition of short-term rental unit specifically excludes hotels and bed and breakfast with regards to payment of occupancy tax when booked through a marketplace. They will always, hotels and bed and breakfast will always remit local occupancy tax to local government directly, not through the marketplace. The marketplace is not going to be the ones, because sometimes I think this day and age, a lot of bed and breakfast and hotels even are using marketplace facilitators, short-term rental marketplace facilitators, but they should continue to collect and remit occupancy tax directly to the local official. It's kind of confusing, doesn't it? There is one exemption for local occupancy tax, and that is government entities. I know I mentioned earlier on sales tax that nonprofit entities can use their exemption certificate to not pay sales tax on overnight rentals. That does not go for occupancy tax. Only government entities are exempt from the occupancy tax. And again, just ensure that the renter or your customer provides proof of that exemption. You've got an example here. It's a fillable form. And that the name of the payment method, just like with sales tax, matches the name of the government entity. They can't have a government exemption and then use a personal card or check. So a little difference there for sales tax. Several different entities qualify to use their exemption for sales tax on short-term rentals. occupancy tax, only government entities. We do have a local occupancy tax information page on our website. There's a link to it. It is due on the 20th day of the month for tax collected the previous month. But again, we're going to tell you to check with the local county or city official about their process and compliance requirements for the local jurisdiction. One thing we are not touching on today is franchise and excise tax. All for-profit foreign and domestic entities that are chartered, qualified, or registered in Tennessee to do business in Tennessee must file the F&E tax return and pay at least the minimum tax. There's a little bit of information about this in our short-term rental unit manual, specifically with there's some information about some exemptions that may be applicable to short-term rentals. But there's also an F&E tax information page. You see a link here and an F&E tax manual, and we have a webinar dedicated to F&E basics. We're just not gonna, that would probably be a whole nother webinar to just talk about some of the exemptions that might be available. But check out our manual for that, either the F&E manual or the information about F&E that's in the short-term rental unit tax manual. There may be, maybe you're a short-term rental unit that for some reason does liquor by the drink too. That might be applicable to you. But really in this webinar, we're just focusing on detailed information about sales tax, business tax, and occupancy tax. So let's see, we've got an example here. Before we move on, I'm going to real quick open up the chat because we're getting towards the end here and I want to be able to hopefully answer a few questions and have some time here. So I'm going to say, let's see, all attendees, let's see, you can chat with the panel now if we've got time for that. I think I did that right. We've got an example here where a property owner has a chalet in Gatlinburg, Sevier County, and they use vrbo.com to book the majority of the time, but they also have where friends and family can book directly with the owner. I see a typo here, gold cart, should say golf cart available to rent. Let's see here, the fees from bookings made through VRBO. For sales tax, VRBO is going to collect and remit sales tax. For occupancy tax, VRBO is going to collect and remit occupancy tax on the state sales tax return, Schedule F, these are from those bookings made directly through them. And so we're looking at the first row here as the example. For business tax, VRBO.com is subject to tax on the commissions and fees earned from facilitating the rental. Property owner is subject to tax on all the rental fees. Okay, the second row here, the fees from bookings made directly through the owner. For sales tax, the owner is going to collect and remit sales tax on those bookings. For occupancy tax, that owner is going to collect and remit occupancy tax to the local jurisdiction on those bookings. And for business tax, the property owner is subject to tax on all rental fees. The fees from golf cart rentals. The owner is going to collect and remit sales tax on those. There's going to be no occupancy tax on those fees from a golf cart rental. For business tax, the property owner is going to be subject to tax on those rental fees. Going to point you here to how you get over to where our tax guides are. You'll go to, and if we had a little bit more time, I'd take you over to our website, but you go to tn.gov/revenue, click on tax resources and then tax guidance. That'll take you over there. Over on the right-hand side of this slide, you see you can, where it says questions, that's from tn.gov/revenue, where you can find all of our help articles. And then all of our webinars, where again, you can get a video of today's presentation later, you'll get to by going to our homepage, tn.gov/revenue, and then clicking on taxpayer education and outreach, and then tax webinars. So we will land on this page for just a few minutes that we've got left here to Billy and Dan and Thomas, if y'all want to hop back on here and address any questions that might be coming through the chat right now. Let's see here. I see a lot of stuff coming through.
Yeah, Katie. Of course, some people wanted to know where the recording would be made available, and it's going to be on the website where you signed up to get into this presentation. So just check tomorrow, and that should be out there. So that'll be no problem.
Yes.
Question about business license. I thought a business license was not needed unless you gross more than 100,000. Is that new and different? Well, I'll answer that. Business licensing, there's three different levels from zero income until $3,000. No business license is needed, but from 3,000 to now 100,000, a minimal activity license is needed from the local governments. Okay, so that from the city, the county, you would need to get minimal activity licenses. And when you exceed the $100,000 level, that's where you need to get a standard business license and to also to continue to remit business tax to the Department of Revenue. Okay, thought I would go ahead and jump in on that one. Thomas, did you see one that hit you in the chat?
One from Amy Lawson. She said, when doing the taxes on TIN-TAP, we include everything for the whole state minus those that are over 90 days. Correct. If you have transient sales that are over, transient staying over 90 days, the first time you can include those, and then you would back them out on line 6 under exemptions. I think it now falls under, I think it's section A, line 11, which is other deductions, if I remember that right. They just updated the sales and use tax return, so please do not quote me on it, but it is line 6 of the main return as exemptions. But if you're fully in the business of doing, rentals over 90 days, then you don't have to worry about it. But if you are within the business of doing rentals for 90 days or short term, make sure you do include those and back them out on line 6 of your sales and use tax return. Because when a friendly auditor comes to audit you, they will question where that money is.
Do you have friendly auditors?
Thomas is a friendly auditor.
We have plenty of friendly auditors. The ones that you don't want to meet are our friends from special investigations.
Yeah, they're not quite as friendly. No, but no, seriously, every auditor I've met at the Department of Revenue in 2 decades has been quite friendly and helpful. So good news on that. Hey, Katie, Jesse says a gold cart is a golf cart that's painted gold. Is that right?
Yeah, that's what I meant. That's what I meant there.
Yeah, we knew that's what you meant, so you're good. Okay.
I'm already going to be making one change to this PDF at least. So I'll make sure to go in there.
All right.
A gold golf cart.
Yes.
Robert asked a question: if a registered business rents campers or other mobile units, are they subject to the occupancy tax? I want to play 20 questions with you, Robert. I cannot answer that right off the top based off of that question. There's so many other questions that I would love to ask that we unfortunately do not have time for. Robert, I would highly recommend that you reach out to Taxpayer Services on their revenue.support@tn.gov and ask that question. Provide as much detail as possible so that we can give you a clear answer on that.
Hey, Thomas, was that on the occupancy tax part of it?
Yes.
Let me make a better suggestion, in my opinion, anyway. Katie mentioned in her presentation that we have the main focus of occupancy tax rests with the local governments, and we have some base information that we can give out, but we really don't have a lot of detailed information on occupancy tax in our division. I think it would be better to actually address that locally to the county or the city that administers that. However, if you still want to run it by us, that's okay. It's fine. We're not going to refuse you. But the local governments, in my opinion, over the years seem to be more of the technical experts on some of this stuff. So, and that's on the occupancy tax. We got you on sales tax, business tax, F&E, all the other taxes you're talking about. But
which in that scenario, Billy, so since it's a camper or an RV is actually tangible personal property. That's not real property. It's a thing, right? So it's always going to be subject to sales tax and rental of that camper or RV is also going to be subject to business tax. It's just the occupancy tax that we're not the experts on when it comes to that. And that's actually a really good question, because there's a new industry out there because I have used a service like this where I've rented an RV through a rental marketplace facilitator. Actually, it's called Outdoorsy. And I think that's a really good question to pose to the local government: is would that be subject to occupancy tax? I'm making a special note to look it up myself because I'm curious. But sales tax and business tax on rental of camper, we got that. That's yes.
So here's one. This one says from Colleen, a house only rented through an Airbnb, is the owner required to have a business license? And I see heads nodding, and I agree. Of course, absolutely. And the owner does need a business license on that, because Airbnb doesn't remit business tax.
Right.
That was an easy one, actually. Yeah.
I'm going to go back to slide number 7 and kind of rest on that for just a second. This is in the business tax section, and we switched gears a few times here, but this was when we were talking about business tax, who is liable. Individual property owner, like Billy just said, must obtain a standard license, and that's if you fall over 100. But the small bullet under that, the sales between 3,000 and 100,000, you'll get a minimal activity business license for those.
Very good. Someone also had a question, said you said I can have a different business license per property if you choose. Do you add all of those up to get to the 100,000 minimal license? Yes, you do. You do that by jurisdiction. Okay. So you look at within the city of X or the county of Y, am I going to be exceeding the 100,000? Yes or no? Okay. And that's where you come down on that too. This is different. This is way different than it used to be. Okay. So this is something that we're all going to be sort of piecing through together. But like Katie said in her presentation, you have the ability to register just once in that city and that county, and then report your gross receipts accordingly for all the properties within that city or county. It's just a lot more streamlined. Some of you that may be on this webinar, you may have quite a few properties. And when that happens, it gets very complicated. So streamlining that is fine. And like Katie mentioned too, if the addressed property on our system is sold, then we'll probably just need to swap over to a different address within that jurisdiction. That's clerical, no big deal. We'll fix that for you in a heartbeat, and we'll work with the county and city and let them know too.
I see a comment about property taxes. We do not manage the property taxes. That is managed through your local city or county municipality. So I recommend contacting them regardless if it's a business or commercial rate. We only deal with the business tax license side of things. And I see another comment from our friend Robert. Robert, I recommend reaching out. If you have questions about occupancy tax, reach out to his question, Billy, is so if I register business rent, if my business rents campers and mobile units with wheels, are they am I responsible to collect and pay sales tax over 90 days? Robert, we could, like I said, I'd play 20 questions with you on this one just to get more nitty gritty, so we can give you the right answer. I'd recommend on that question to, reach out to Taxpayer Services and
right.
And lay it all out, or even call the call center, because there's so much. If you do one little thing different, it could change the possibility if it's taxable or not. So there's too many. There's a lot of questions that need to be asked to answer that question properly. I just don't want to steer you the wrong way. I'm not trying to avoid it. I just don't want to give you the wrong information.
All right, we have run out of time. There's just so many. Make a good point there, Thomas. With a lot of these questions that I'm seeing in here, it kind of depends on a lot of different things. So reach out to us if you have further questions about this. I also want to recommend you to go to the tax manual, the industry specific tax manual just for short-term rentals. If you're in this business, you need to bookmark that manual because it will be a really great resource for you to answer a lot of your questions.
Real quick, and just right before we wrap this up, for any of our city or county clerks that are on the line regarding the business tax, don't forget we're going to have special training coming up for you in September, and possibly what, Katie, October?
October for the
Depending.
cities, late September for the counties. Yeah, we can
Right,
go over
right.
this during
So
that.
we're going to go through all the business tax stuff. We've already got some stuff we're working on. We got you. And Katie mentioned about the CPE. If you don't know, if you
Sure.
don't mind as well, there was a question on that.
As you're leaving right now, there'll be a short little survey that pops up. If you need CPE credit, it's one of the questions on the survey as you're exiting. Question number 4, just make sure you answer yes to that you need tax CPE credit for it. So one other thing just to call to your attention real quick, I know I mentioned it, but our webinar next month is on business tax law changes. That'll be on the last Tuesday of the month, as always, September 26th. We also have a new business workshop coming up. That date doesn't look right. Did I mess up with that too? Man, if I did, I thought it was, anyways, it says here 10/8, but check with our website to register. Go to Taxpayer Education and Outreach. Make sure you follow us to keep abreast of everything we've got going on. And sure glad you joined us today. Hope we took some of the guesswork out of this confusing topic of short-term rental and taxation. And Thomas, as always, we love having you. Thanks for correcting me when needed. Thanks for all of your guidance, as always, with this complex tax topics.
Thanks
Thank
for
you all.
everybody coming today. I hope everybody got something out of it.
Have a good one. We'll see you next month.
Okay, see you. Bye.
See ya.
Thanks again.